Good afternoon and welcome to the end of day review for today. And today is Thursday, April 25th, 2024. And today we have a lot of volatilities due to the medium to high impact new GDP data and also the earning from big tech company Microsoft and Google. That's too big right there. That's the reason why you see the price, the market really spike right there after the hour. See, I we think that's largely due to a Google have a good earning. Anyway, so we are in week 17, which is the 4 week of April and the 4 weeks of the second quarter. And we have a lot of news for this week, and next week we have FOMC meeting, so lots of volatile, big move, and we try to capitalize that move. That's our job as a trader, right? Especially day trade. We want to capitalize on a move, catch a move. It's like fishing, waiting and catch the move. The GDP data released today, so 25th, and it come out kind of very low. That's the reason why we see that in the after the new release 8:30 it really dive, but then it's reversal, very strange, right? Yep. And that's where the big move gonna make. Volatility is inject into the markets right there. And then next week we will have a Fed meeting, so everyone expect that. And then a week follow we have a non-farm payroll, the first I think the first Friday of the month. Last time we have the 5th, April 5th. This time we have May 3rd, right? May the 3rd, right here. Yep. And then after that we have a CPI data. Okay, look in today. We're gonna see how it gonna happen. So today when we go in, we see the huge gap down. Yeah, oh man. We see the huge gap down for today. Let's look at see the gap down for today. So let's see what. Wow, look at that. It really. Yeah, we see the huge gap down. Here's our 15 minutes with regular trading hour. So we see the huge gap down, and it did the magic right here. Right, according to this model, ICT model, if we see the gap down, then it's gonna continue to get. In this case, the gap is between the prior day, liquidity. Day low, okay. Previous day low. Okay. Yeah, it did take an previous day low, which is right here is the Wednesday. Actually, yeah, it did take the previous day low right there. It's more than that. It go into Tuesday also. See the Tuesday? Yeah, take the Tuesday low also. Yeah, it is Tuesday low. All the way Tuesday lows, and it's almost almost go to the oven of the wick right there. It's very low. And then it reverse. Oh man, look at that. Oh, can you believe that? This model, you see, it create a double bottom. Man, man, we missed that. Man, you see that? Exactly, ICT model is so accurate right here. So it's the model 212. Exact match right there. Man, you see that? Exactly. But if that's the gap between, no, it's more than, it's like the bottom right there. So, but the formation of the double top, it gives us double bottom is so accurate. You see that? The only difference is that the gap is way down here, but the formation is so accurate on the double bottom right here. We didn't see that when we come in. That's our mistake also. But when we're going today, we see the drop down, right? We want to play the reversal trade, and you see that when we see at 10, we see the smart money diversion. We check that right here. Not right here, right here. Right here at 10, we take the real time right there. We see the smart money diversion between the S&P future and the Nasdaq. So you see at 10, it's make a low, but this one make a high low. See that? That's where we should put all our money in. But the trick that we did go in at 10, and let me see. So let's edit this in edit with the pen right here. Yes, so we have smart money right here. So smart money division at 10. The ES is it's a low. Can we say low versus a Nasdaq is a high low. Yeah, the smart money technique is so critical, especially in in certain time of window. It gives you the signal right there, so you don't have to know where you give an idea where the reversal may happen right there. Yep. Save it. Yeah, we got it. So at 10, we see the diversion, and we go in. We put the buy stop right here, the level. We got in the trade. If you look at the recording, right, we wait right here. See, right there, it break down. That is when the GBA data release. and you see at 9:30 right there. Yeah, you see that? We go in right here. Oh, this is the paper tray. We go in the first tray. We do the paper tray. So we go in. Yeah, we go in right there. Yeah, we go in a little bit early. We go early at I think at 9:45. That's where we go in. Yes, so we get in at 9:45 right there. 9:45. We go in at 9:45, and we got stop out. We use the paper trading for this account. So that is our. We got stop out. The 10 right there. That is another swing low right there. At 10, you see? Yeah. Yes. So at 10, it make a diversion right there. Yes. So we got stop out, and we see that's flip. So we go in right here. We go in right here, and yeah, look at that. And it got to this point. We're almost thinking about get out because we got 10 points, which is 1, 2. We reached 5 points and we got 10 points, 1 to 2 right there. But actually we want to get to 47, so we get 3 points right there. I mean 1 to 3, which is 15 points. And it felt to get that, and then we get out with a less than profits, about 100 with 2 or 3 points right there. I think it's about, yeah, I think about 3 points. We got out above break even right there. That's our second trade, which is the real trade. The first trade with the paper, right? The second trade we got the real trade, and then let's see. Yes, this is the trade we take. We go in at the real trade right here, and we get almost more than 10 points right here. We thinking about we put at 32. We move our stop loss to break even, and did we get stop out? Yeah, we did get stop out. At 32. Right here, yeah, it's below 30 right there. 32. Yeah, we got stop out. And that's we got stop out. So we should not move our target. Excuse us, we should not move our stop loss too quick. Just leave it here. We move our stop loss, and that's where all things start rumble, unsettle a little bit right there. And you know what? It come back and it stop it out. We move our stop loss at 32. You see that 32? Where exactly we got stop out. Yeah, so we got break even trade right there. Nearly break even is $100.75 about one. And now right here we get in again. We go long again. Right here we see a flip. Yes, that's where we put our buy stop right here, and we get long again. Look, get long again, and we wait. We get long again. Okay, so we are good in this one. We move our stop loss, and that where it give it a hard time again right here. After we see this, we scare. We get out, and we get out. Yeah, we get out, and you know what? right here, we scared. We thought, okay, you see the range right here, we draw a trend, we say, okay, if this range, if not gonna break this, and at that moment, we go short. Because we thought, okay, it's this expansion, and then retracement, and retracement fell, so it's gonna be expansion to the downside. And as soon as we see this, we remember the setup, the level. So if it close above that, it hang like that, so it's a short setup. But we have to put in context. If it hang up here, then and short, but right here is from the bottom, that can be a bullish signal right there. So we have to retrain ourselves a little bit. And right here we go short because we put a long position, right, and then we move our stop. We got stop out. We got really little bit, unsettled right there, a little bit, frustrated. So we go and short them. And as soon as we short them, what happened? It come back. It stop it out. And at that moment, we look at our profit and loss. It looked terrible, and it really unnerved us right there. And that's the risky, not the risky, but not good practice to look at profits and loss. So at first, we start out good, right? We have a profits around 600. I remember 0 something, almost 800 is something, right? Because it's more than 10 point. 1 point you have at 1 point, 1 point is equal $50, and at 1 point at one time we have 12 point, so it's almost $600 profits right there. When we catch it level right there, almost and we decide not to take. We want to hit this level, but it did not. It pulled back, and it scared us because we moved our stop loss 2 times. Our stop loss go under here, but we move it, so it kicked it out, and then from here we get back. It's only 175. I remember. Look at the profits and loss, 175. All right, and here's where the mistake we make, because we keep looking at our profits, P&L, and it gives us a hard time right there. Next time we try not to, because the setup's so beautiful. It coincides right here. If you look right here on the 1 hour time frame, we see right what we see right here. We see a bullish breaker and fair value gap right there, and this is retest that, so it's gonna bounce. So give us a very solid signal to go along. And also we have a so-called right here head and shoulder pattern right here. Even though we don't see any gap right here, you know that? You don't see any gap. Maybe there's a gap right here, but no gap down here. So, but also the time is alignment. The 11 time is the very critical. If there's no reversal 11 time, then it's gonna be expansion to the outside. The same thing happened like on Monday. We see that phenomenal right there. Looking for at 11 hours, it's very critical. By the way, so we make mistake, right? We go long at this candle and we get stopped out, and right here we try to go long again, and then as soon as this candle flip, we turn to short. But somehow when we from this positive 75, and somehow I don't know, we got some kind of mistake because we do reverse order. Next time we don't do reverse order. They have a reverse order right here, and that's where we get in trouble. Right here on the NinjaTrader system, they have a reverse order. So look like the reverse order will be sell at the stop loss, not at the market price. Next time we need to close, and then we open a new position. it's very strange because only two trade, and then from the positive we turn into what? We turn into negative 500. I think 507, 78 something, and we get so discouraged, and our brain is kind of gets all kind of emotion, unprocessed emotion right there, and that's the reason why it rattled us a little bit right there. Basically, we say, oh, what if we should check the profits when it's 600, so we don't have to give back right here, and now we have to we start our day good green, so why don't we keep it green and now we get lost? Oh man, that's really, we go through a so-called emotion roller coaster right there. We process now, brain. But anyway, so after we short right here, it flips, so we go back and we'll go long again. And this time it worked in our favor. We're so happy. Otherwise, we feel depressed. Because instead of get a green day, we turn into red day. And but right here, we got stop out again. You know what? When we go long, no, not really. This one we going again. No, after that we go long, right? But after this candle flip like that, we got stop out again. But after this we go long one more. So I think that's the reason why we get, we turn to the red, in the red area right there. So we make a couple of mistakes. It's all emotion right there. We need to get rather manage our emotion right there. But anyway, we catch this trade. It's huge one right here, and but somehow, okay, let's see. Yes, so right here we I think we stop out right here. Let's look at the trade records real quick. Let's see where we stop out. $87, oh, 200. Okay, so we get out at we put our stop loss. We didn't put right here. We should put right here. We did move right here, and then we got a little bit nervous, so we put right here, and I think we got a hit around. I think let's move forward. We see that we got hit. Yeah, right here. We got hit right there. Oh, okay. So we go past it level. We should let it run. Put stop. To keep our stop loss right here. At first we stop loss, and when we got moved, and after we move, we got hit. Yes. So we got hit at this candle. I think we got hit at this candle. Yes, exactly this candle at 13.15. Is that right? 13.15, or right here? 13. I think we get out at this the pullback right here hit it out. But actually, we put right here. I think yes, we go out at this candle. Yeah, that's our mistake. But if we stay in, we get huge profit right there. But we did not. You see, we aimed the profits. It's right there at 80. It did hit 80 level right here. Right there, exactly what we aim for, because we know that it's gonna rate it buy side. We know, but the emotional involved, the fear and the greed, in this case the fear of give back again, really really take control of us right there. That's the point I try to make right there. Yep. So we give back a loss right there. Yeah, so we check how many trade we take today. 1, 2, 3, 4, 5, 6, 7, 8. Yeah, we take 8 trade today. Right, is for today we take 8 trade. And we come out, we come out right here. So we take 8 trade for today. This is a real account challenge. We check right there. So we come out with the green. For the last trade, it recover with the loss, but we should have win more. But anyway, we try to be easy on ourselves. We try to celebrate both whatever market gives to us. We should be happy, and we're happy with the loss, and we're also happy with the win. So that should be the approach, the mental that we need to have forward. So we don't have feel down when we lost and feel so excited when we win. So we have to keep our mindset level. That's how we should manage that. Yeah, so the last trade we win, this much. So for today, this is what happened. So let me see. So this week we're doing, so far we stay ring for this week. It's our 4 weeks of the challenge right here. So basically we take 8 trade for today. So for today we take 8 trade. The first trade, we cast it move, but we don't take early profits, so when it retrace, stop it out, so we get that much, and later on we trade 1, 2, 3, 4, 5. We trade 5 more times, and then one of the trade right here we close out with this, and then the last trade we win this much, and it recover the loss for us right there. So that's 8 trade right there, just around this area. We make mistake right there, but we'll learn. So basically next time we will try stay commit right there. We forgot about the idea of reversal with the double bottom. We only anticipate now I had reversal just one straight shoot up, but it's not always the case. In this case, it create a bottom. And beautifully, in ICT model setup, he did tell us that there will be a double bottom. How accurate is that? And we forgot to review this model. That's our mistake also. Or maybe we see through, but it not stick with us. That's the reason why we need to do more practice. So become our second nature when we saw it forming, when we see the formation of a setup. Yeah, so that's a huge lesson for it right there. Gap down, right? Rate model ICT right there. Gap down, rate the low. Where's yeah. It's be more better look at the regular. So basically gap down, rate the yeah, do we need to add right here quarter theory? Oh, so not working. What happened? What happened to our quarter theory? Okay, we will take a look at that later. But the whole idea that it take out the Tuesday, it go down below the Tuesday open right there, and it go almost to the Sunday open. Great bottom right there. Oh man, that's the Judas swing. Very interesting. If that right, do not return. Yeah, you see that? As we live the huge move up here, but anyway, we learn our lesson. You need to manage our emotion. We get the bias right, but the execution today is not that good. Let's be honest, the execution is not that good because we're afraid. I mean, we're afraid to take a loss. That's only the third part right there, right? We have a big run, hill run, do win on Monday, but today we kind of scared. That's the reason why we keep move ourselves stop lot and get stop out and get confused. But we're glad that the final trade really give us some some profit back to us, so we stay at green day today. Otherwise, we feel miserable. But anyway, we need to stay neutral and manage our emotion, because that's the nature of trading. You never know. Give your best, and what the market gives to us, just take it. Don't personalize it. So that's the whole idea right there. And let's look at the the recording right here. See, yeah, after that it break real hard up. You see that? And that where it goes to the open today, which is touch the open right there at 50.70 exactly. But eventually it take that buy side right there. Looks scary right here also. Right, we're thinking about go short right there, but right there we thought, wow, maybe it can be a short setup, but let's see. Yeah, it will back all the way. Why we don't go long right here? Wow, look at that, it looks scary, but that's it. The moment we go long, because we see the fabric gap right there. And we see right here the bearish breaker for a pretest. We thought that rejection right there, and we see it go down. We thought, oh, we need to go short, but that's precisely the moment that the market flip. You see that? And then boom. Boom. Yeah. It hit right there. Wow. See that? It hit the buy side right there. We should have go long right here when it flipped. I think we did have some screenshot right there that we are 1535. Is that 1535? Okay, right there. $15 right here. Oh, put buy stop. That's what we even though it go down with one buy stop, but we didn't execute a trade. We're a little bit scared because we already go through too much trauma for today, and we want to stay with a green day. That's the reason why it's very hard to pull the trigger. But the idea that we want to put a right there, we did say that 56 right here, one big buy stop right there, even though it's below that level, one push stop buy stop at 15, but we couldn't pull the trigger, for this reason that we always discuss. It's just emotion, trauma, and too much for us when we have to enduring this horrible show right here, and now we have $100 ring, so we feel like, oh man, too much for us to go in there. and go through all of that again. So, but that's how we learn. And we didn't pull the trigger. You see that, and that's exactly the candle flip right there, and it break the next next candle it break right there. You see that 15. You see that? Yeah, the next candle is break that level. You see, if we put buy stop right there, it's perfect right there, but we did not follow up. Yeah, that's the beauty right there. Let's see why. Why? Because we get too much, trauma time today. That's the reason why when a setup come, we fail to pull the trigger right here. Exactly. Buy stop right there. 4 breakout at 4-6 right there. And next candle it carried into the trade. And the target is the buy side right there. Beautifully. And we couldn't make it. So that's the challenge. Yeah, let's do the document right here. But anyway, we have learned so much, to keep practicing. We're getting better. Just be patient on ourselves. So 4 breakout. Exactly. Buy stop. See, when it down there, buy stop right there. That's a very low risk trade right there. That's our mission right there. Find a low risk trade. If it break down, they will never execute us order. But if it break out, it will carry our order and hit the target. But we will not get hit into the next candle. So 06650 right there, and 80 time for us. We check the next candle. This candle get flipped. Very basic idea. Next time we will do it. Why worry too much? Because look right here, rejection, and we thought it's gonna break down, but that's exact moment we need to go and put a buy stop. We see right there. So exactly 30. Wow, that's the time alignment right there. Let's see, the 30. Yeah, right here. Yeah, 30, the swing. Yeah, one more thing, we thought that in ICT he mentioned right here. That's which one of the reason we did not take that long trade also, because we are looking for what we're looking for a swing at 130. But you know what? In this day, today the context different. Today is a reversal, right? But in this context, it's just consolidation right there, and you get out of conversion with a Judah swing, and then. But for today, the context different. Is you have a Judah swing, and here's the reversal. So the context different. So don't fret about the Judah swing at 130. I think one of the reasons we hesitate because we thought there's gonna be a Judah swing at 130. Take out the London, not the London, but the lunch time right here. We're afraid right here. We're afraid that it's gonna be a Judah swing at 130. Take out the lunch time, and then it reverse. But if we aim the target right here, or the buy side ability, we reach that target, we should get out. But anyway, we saw trauma time in the first 8 try we take, so we run out of mental capital. For lack of better word, we run out of mental capital. We don't have a mental to execute the trade. Simple as that. Yes, buy side right here, and we just target the sell side of this one. Yeah. So the target is gonna be just the south side of this. Right there. So we can have a good run right there, south side at 50.82. We will get it. Yeah, 50.82. We got it right there. 82? Yeah, 82 right here. And we will get our, 3 to 1 right there. 15-point run is our target. 15 point. $700, 50. So if we put a buy stop, you remember, at 50.006 right here. It gives us, right here, I think 50.65 right here. Then when we go to the 82 right here, we get 15 point right there. Exactly, beautiful. 51, that's our target. When we go in right here at this candle, we get our target and we get out here. We should do that right there. It hit 82 right there on the next candle. It's more than 82, but anyway. And it reversed right here. Wow. Whoever goes short right here, a little bit careful. You have to get out, or it's gonna be a little bit trouble. We thought we're gonna, we're thinking about short right here also. We got a time, right? The time. What time is that candle? Right here. 15. We're thinking about it should swing at 13:30, and then it's gonna be reverse. So we're thinking about take a short right here, but we couldn't pull the trigger neither. So that's right here. But we have to aim for our target, otherwise, you see, we did take that screenshot with a swing sweep, that look pretty, so put right there. But we have to aim either right here or right here, otherwise we stop out. And it's right here. So if we aim right here, then we got 10 point, which is 1 to 2 ratio if we want to go that way. But anyway, we did not take that trade, neither the short trade. And what else we have? Okay. And then at what time? Right here, we have a smart money diversion. Right here. Okay, make a low, and it's equal low or high low right here. So we thought that that's gonna be, but this time it not happen. So that's why we need to pair the smart money with the time. If we just solely based on the smart money diversion without the time, we may get a lot of things wrong. So to be careful right there. Anyway, we try to keep this review around 45 minutes or so we have 2 more minutes, so we can wrap things up right here. Alright, let's look at the recording right here. So you see that right here, beautiful right here. We should go long right here where you see this candle flip. So basically you see this level right here at 50.70, that's the open for today. So it break above the open and then it break down below the open. That's where we need to put a buy stop to go long. I believe that we do have that right here. That's right. Okay, we do have the screenshot we take right here. We should go long on that. The idea is that at 45 right there, the idea is that you look at this candle right here. It open below that breakout level right there. That's the perfect to go long. When you want to go long at the level, you have to put a buy stop above the current price right there. It's open below, and look at candle before that right here, candle 1455. It break down that level, it's close below that level, and then a candle, next candle, it open below and it retests the high of the candle, and it's like, it looked like if it failed a retest. Basically, the candle, it failed a retest. It wanted to retest level and it failed it. And then the candle at 45, it opened below. You see that open below? In the real time, it opened below. It looked like it's gonna follow through, go to the outside. But it flipped. Look, it flipped. You see that? Let's see. With that, and that's where exactly we need to go along instead of short. You see? It looked like, yeah, right here. Looked like follow through, right? But it did not. Right? Looks scary. Looked like gonna follow through to the outside, but it did not. And then you see that, yeah, right here. Oh man, right here we thought like, wow, it's gonna follow through to the outside. It turned the reversal, it turned a retracement to reversal. But that's exactly the moment we need to put a buy stop at the open right there. Either this level or at this level. It's better at the level, so we have another 4-point profits right there. Go and put a buy stop right there, man. And you see that? That exactly the moment that it flipped. It flipped. Yep. Yeah. You see that? We got a flip. You see that? Right. It flipped. And look at that. It will never look back again. So strong. Right there. And it hit the target, which is, this level again. Wow. And that's it. That's the end of story. All right. Thank you. Let's look, before we leaving, look at the daily chart right here. At first, at one point, this candle should go all the way down here, and now it's reversed. And look, we see it looks so bullish right here. You look, the gap down and gap up, and this one a retest. Gap down, gap up, retest, boom, it's gonna explosive. And we received some article. They say that the next 2 or 3 weeks it will be explosive to the upside. So let's see. All right, bye for now. Thank you for your time and interest. We always are grateful for this opportunity, and we do what we love. Success is coming our way. Bye for now, and have a great evening.